Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So actually today, as usual, we have prepared the fundamental report where we have taken a look at some leading indicators. The debt market have considered the new vision of the global financial system. This is not from us. This is from Credit Suisse economist who previously was occupied with the Fed, with the Ministry of Finance in the United States. So this is the guru of the political economy, and he actually tells the same thing that Putin said in an economy forum in St. Petersburg when he said about the commodity-based currencies. And actually the Mr. Posner, it's economist of the Credit Suisse, have talked about this even before Putin's speech in this forum, and he also explained the problems and the specific of the structural crisis right now in the Western economies, and what really could be with the performance of the commodities and why Fed can't actually control this crisis and can't normalize the overall situation. So we have put also the original text, but I have provided in the report few extraction from it because it's just something most important things. In general, we do not see any big shifts in our vision, and actually everything goes as we suspected, suggesting that gold should remain under pressure for a while investors actually are very slow-minded. They still believe what Fed tells, and they still believe in United States treasuries. They believe in the promises of the Fed and central bank, European Central Bank, that within the 2 years inflation should be around 2.5, 3%. So, and they still believe that. So actually, as Jerome Powell tells, the economy is strong, consumption is strong, and everything will be good. Well, but you could just check what Jerome Powell told about inflation just 3-4 months ago to understand that all these promises are actually nothing. And depending on how fast investors understand that, as soon gold turns to the upward reversal. So by the performance of the gold market right now, it seems that investors not quite understand it yet, and keep moving in the classical, educational performance that usually is taught in universities when everybody tells that everything is bad, just invest in the treasuries and that will be okay. This idea is not working anymore. Meantime, in the performance of the gold market right now, we suggest that, theoretical, if market breaks down the lows right there, within the maybe few weeks, it could open the new trading range for the market. Will be around starting from the 1680, 17 even area, where the market really could drop. But at the same time, as we're coming to the culmination point when the reversal in the gold market should happen, this reversal probably starts explosively. And if you intend to invest in the long term in the gold market, we suggest that maybe it will be not bad idea trying to buy a bit gold right now with the small pieces without any leverage. We prefer the physical gold. If you could find a dealer with relatively low bid-ask spreads, you could buy bullions, for instance, the few grams, for instance. Still, if you like to invest in an exchange market, choose broker in a more or less stable countries such as Switzerland, maybe Arab Emirates, something like that, because I suspect that London market and United States market, which is economics, might turn in a very negative situation. So it might be some problems with the trading there if everything goes with the worst scenario. But this is what about the fundamental picture in the long term. In the shorter term, as I said, these lows really makes, well, a lot of importance for the markets. And breakout could significantly, will open new downside range for the coal market. On Friday, as you can see, our analysis was absolutely correct. So indeed, market has just wash out the stops below these lows and shows the pullback. So we have explained it in the Friday video why this should happen, and we said that taking the stop sell order right there is not a good idea. It will be better to wait for a pullback and taking the short position on some resistance area. On the daily chart, we're still watching for a target of the butterfly, which is 1760, 127, 1618, 1730. This is nearer standing targets on the daily chart. And in the beginning of the week, we intend to keep an eye on the possible resistance levels where we could consider taking the short position. So in general, with this downside breakout, this is also might become, and actually maybe it is, the extension swing on the weekly chart. So take a look at the weekly chart now report, you understand what I'm talking about, because here we have the weekly ABCD pattern. That was the OP reaction on an OP already has happened. Markets keep moving lower, so that might become the starting of the extension to the XOP target. And from that standpoint, we do not want to see the too strong retracement above this top. So that's why on the intraday chart, I suggest that we could start with watching for 1823, 1820 confidence resistance. So because the performance here is actually, you could see the hammer pattern there, and it could take the shape of some ABCD pattern on a lower time frame. If we will get to the ABCD, for instance, that's the area that we intend to keep an eye on initially. If we get some stronger performance, I don't know, maybe something of this kind, we will decide whether it makes sense to consider higher standing level, maybe 1830, 1842. But we suggest that retracement should stay inside of this most recent swing, supposedly. So that will be perfect from the performance of the current market based on the swings that markets is forming right now. It is not suggested that it should be action above this top, some upper acceleration, if of course the fundamental background will not change. So that's shortly what we have on the technical side. So let's keep watching for this confluence in the beginning of the week, and then we'll see whether it was suitable for taking the short position.